Friday, August 11th, market analysis, Stan Ehrlich, TGIF. We always start out with the stock market indexes, as I will again this morning, and typically with the S&P 500, specifically the Spider SPY. So we have now almost finished closing the gap that I have been talking about for weeks. The exact price to close the gap is 442.97. This morning's low so far is 443.35, so we left 38 ticks of gap left out of 2 full points. And that gap again happened back on July 11th, a month ago. And I started talking about the gap closure back then. Then we got the top of the market in a resistance area, overbought conditions, and a red bearish engulfing ER sell signal on the high day. Took it a couple of days to kick in. Then we gapped down. Now that's important. We have a gap to close up here, spreading it out a little bit. And that is what we're about to do next week, in my opinion, is come up and close that gap. That means we should rally at a minimum up to 455.5. And it won't stop. It'll probably keep going. The long-term trend is up. The bull market's not over yet. In fact, I don't think it's anywhere near close to being over, maybe halfway. But things are working out perfectly so far. Now, there is a chance that we may not just close this gap. We may ease off a little bit more toward 438.5. And the furthest down I am not expecting, but could understand happening without changing the longer term trend, would be about 432.33. So definitely from 443 down, say another nickel, 5-6 cents lower, is probably where we're going to turn back up again. So having that in mind and hoping that that's going to be correct, it'll take another few days. I fully expect it to happen during next week, maybe early next week, and up we go to total new highs for the trend completely. Let's look at the DIA. We should have something to say very similar. We've closed the gap already in the DIA a week ago, and we have 2 bearish engulfings involved in this possible short-term modest top that's not quite over with yet. So I'm expecting the lows of a few days ago to be challenged at a minimum, and probably 348.5. But my best shot is 345.70 as far as the likelihood of the major low again early next week, or definitely next week, and then up we go. So that's the DIA. Now MYM, by the way, is a futures DIA substitute symbol, the micro mini Dow, I believe. And we did get January 5th as a sell signal like the DIA. And we got a bullish buy signal October 13th, even though the DIA didn't get it, the micro mini did. We picked the top of the market and the bottom of the market for the bear market of 2023 to the day in both cases. Now, the DIA a little bit lower and then into new high ground. The Qs are close to the support area that I highlighted probably several days ago or a couple of weeks ago. And another sharp little dip down to allow the spider to finish closing its gap would bump right into the beginnings of this red support area, would be just perfect. And that has a low area of 357.5-ish, or you could say the low on June 26th. for the Qs. Now, there's a chance you could dribble off a little more to 351.25, but I'm thinking that in that red zone here is where we're going to bottom out again next week, and I think early next week. Okay, last one for indexes, then the futures. We've got the Russell 2000 bumping against support yesterday and today very, very accurately. So far, the opening this morning was just a hair below yesterday's lows, but right on that green line, which is the beginning of good support. Now, I'm expecting there's a chance that we could break it, maybe by a modest amount. I don't know, 187 possibly, 2-3 points. But starting at 190 and lower, we should bottom out again, if we haven't already, early next week or next week. Now, futures. The bond market continues to be one of my favorites lately, mostly because of this incredible 88-day cycle lows series. The last time it happened was great, July 7th, and then 88 days earlier, March 2nd, and 88 days earlier, October 24th, and almost exactly 88 days earlier with a green bullish engulfing ER buy signal on June 16th of 22, and again, and again, and well, that's a great place to be a buyer, but it wasn't the lowest low. The history has been outstanding for the last 6 cycle low events and extremely good prior to that. Now, the cycle high series is skewed to the left somewhat, and the next cycle high is going to be a Tuesday, a week and a half from now. So all of next week could be on the strong side, I hope, and expect on interest rate futures. It doesn't look like it right now because they are at a new low and a new low close probably since my bullish engulfing on August 4th, which worked fairly well. There was 2 or 3 days here where you had good profit potentials, but I am a little bit disappointed it's come down quite this much at the moment. On a longer term basis, this does not change anything. I just need to stay above our 119.24 30 seconds, the longer term sell stop. So next week, I am expecting it to get up to 124 and higher. Next chart is the E-mini. It's a futures contract and, as you know, a index. So we're back into support, coming down, testing a bull trend line, which, by the way, ladies and gentlemen, looks like the bottom of an upward slanting channel. If you draw a line off of the October 13th low across the next series of lows, December, January, it turns into what we call a bullish resistance line. Bullish because the trend is up on the line, and resistance because we're bumping against it on the way up, overhead resistance. So it's serving 2 purposes. It's a standard bull trend line, and then it got broken, and then it turns itself into the top of an upper slanting channel. These blue lines are extremely parallel, almost exactly, not quite, but super close, close enough. So breaking below the bottom of the channel could turn out to be somewhat bearish, more so than I expect at this point. That's why I'm thinking that these indexes are going to turn very soon, very quickly here, back up. Next chart. This is your 30-year long bond again. I already commented about it, but you'll also see that the bullish engulfing that happened a week ago was in a historical support area, the lows back in October, November of last year. Next, 10-year notes. You can make approximately the same statement, although that was a new low for the whole darn bear trend last week when we had the bullish engulfing. If you believe the bullish engulfing is going to work last week, then this is a very low risk area to get a little gutsy. Granted, gutsy. but it's right there right now. Next chart. Crude. Bearish engulfing yesterday in an area of resistance or slightly above it, but that's a false breakout as far as I can describe it at this particular point. I do want to mention that our new short ER3 sell price is 83.70, and our current tick at the moment is actually, I think it was 83.71. 72, 71 now. This 70. It is exactly where our formula for ER3 new short positions is selling short. Now we have a 2-tick profit. Well, break even. We're short right here, right now, exactly at this price. And the high so far has only been 81. So we'll see if this turns down now in crude oil. Next, overbought conditions and at a resistance level. Yesterday and the day before has turned down yesterday. Good break, not super convincing, and unchanged basically at the moment. I need to see a sharper break, and in particular, a move down below, I guess that's Tuesday's low, 2.9355-ish. That will be much more convincing that we have a larger break coming. I think there is a large break coming, but we're not coming down quite as quickly as I would have thought. That doesn't mean it's not going to happen. Next chart. 2 overbought conditions, dropped off pretty good. New low since then in natural gas. Big sideways trading range for since March, April. And the rally highs stopped it again, although this time we made a little bit higher highs. So I'm fully expecting that we'll drip back down to 2.483-ish and maybe even a little bit lower. Let's see what happens when we get there next. Gold, silver, platinum, and copper have had some great signals in the last several months. Gold is currently a little oversold at a support area, prime target for a bullish engulfing buy signal, but we're not getting one. I am bearish. I am looking for lower levels, but right now at support and oversold implies that we're about to have a little bit of a rally. I don't think it's going to go right back up to 2.0, but I am looking for a small rally. Next is silver. Yesterday, I got a bullish engulfing buy signal. It did not work, unfortunately. We took a day trade loss today on the silver. But that does not mean, because these develop during bottom and top formations and are not always so perfect as the high of the last rally, the low of that particular break to the exact day, the double top formation on both highs or bearish engulfings, and the bottom of the break we had last March. We've had some fantastic signals in silver. This one didn't come true. But again, oversold. At support, prime target for maybe another bullish engulfing. We just might see another green bullish engulfing very soon here. Next, support has caused this to bounce starting yesterday, and that's platinum. Too bad we did not get a bullish engulfing. The low yesterday, if it was just a little bit lower, would have produced a green buy for me, like in silver. This one seems to be working out well in terms of the oversold and the support. But again, there's no green bullish engulfing like we had on February 27th. And bearish on the top of the rally. Now, we had bearish, but it was during the top situation and not the highest high. Often, we get the highest and lowest rally highs and break lows in major swings, if not profoundly important long-term tops and bottoms with the ER signals. Next, recent rally high produced a bearish engulfing on copper. It's working great. This is a new low and a new low close for the last couple of weeks since we've got the signal in resistance. Perfect. We're not quite oversold, so we're getting close. So if you're still short, now's the time to start thinking about tightening stops a little bit more, locking in a little bit better profit. Next, almost on the top, we got a sell signal in soybeans. Then we got another sell signal proved enough to push the market down into support. But from support a couple of days ago and oversold conditions, we did start to bounce up just yesterday. I think on the way up, we have a bullish engulfing. Now, very, very tight situation here. The low yesterday was 1305. Today's low is 1305. The exact same price. Our stop is one tick below that. We did not get stopped out. We did get long anywhere you wanted from the bid, which was originally 13, 16, and 7/8. It does get scary when you get close to your stops, but this is an automated trading system. You're not even supposed to be watching, and you're not supposed to put your hands on and try to change your stops. That is the wrong thing to do. Once we get a profit on a stop, tightening it up, moving it in your favor is a different story. We are not out of this. We're higher than where we opened. We're now at a small profit on the trade, and it's just a rare example of the market coming down within basically a tick of stopping us out, which it didn't do. So I'm expecting, hoping, and crossing my fingers that we're going to see more of a rally immediately today would be great. More the better. And a follow through next week to the upside. Next chart is soybean oil. And I'm going to pass on comment on soybean oil. Soybean meal. I'm also going to pass on some comments on soybean meal. We had a bearish sell signal, didn't work. Not going down much or up much. Pass. Next is corn. Bounced off of support. Almost got oversold. The bounce, if it's over, and I'm not so sure it is, was very feeble. We're just not holding strength like you would normally after making new highs for a week early today, and it slipped back again. I'm thinking there's a good chance that we could drop below 472 and have a downside breakout that could be profoundly bearish on a much longer term basis. Yeah, I think there's a good chance of that. Next chart, wheat. I'd like to say the same thing, but guess what? If you people have been watching wheat prices on a very long-term basis, I want to point out that this 620 area, I'm going to drag the chart way over to the right, and 620 area way back in 2019 was a major historical support area with, by the way, a bullish engulfing ER buy signal on the exact low day. Where is it again? There it is. There it is. On the exact low day. And that was in May 13th of 2019. Now, approximately the same 620 ballpark price range, we are fiddling around for months. This could be a longer term bottom building. And since we are at that critical level, 621, 620, right in that ballpark, 30, on a long-term basis, new longs might have a reasonable to small risk and a huge upside potential. But I don't see the buy signals yet. I don't see exactly what I want, but patterns are one of my strengths. So next chart, cattle, sell signal on the top of the market, had a rally, a little bit larger than I would have expected, but we're surviving. Yesterday's outside down day, bounced back up again this morning. I do not want to close above 184. That would not be in the cards. I do want to close below 180 ASAP. Next, lean hogs. I got a bullish engulfing at the moment. Nah, we're not even close to oversold, so it's not my kind of bullish signal. But it does imply that it'll bounce back again and maybe back up to 180 at 86 area. Other than that, I am basically bearish. The long-term trend is down, and we did get very overbought in the high 80s, or maybe even touching 90. Maybe we did touch 90 a few weeks ago. And we haven't had any higher highs since, and we have had some lower lows. So basically bearish, but nah, few days maybe of a bounce first. Next chart is OJ. We got the sell signal almost on the exact high day on July 31st. This bull market has been extremely strong and continues to work its way higher. The bull trend line since August of 22 is still in play. And my minimum downside objective is not that far away. I already caught the top of the rally. We got ER3 short the next damn day, and down we went, down we went. Bounces happened. New lows have been challenged, but not quite made yet, and sideways for a few days. I think we're going to see new lows next week, and 294, 293, 292, and I wouldn't be surprised if it dropped into the 70s, 270s. Next chart. Cocoa, we got the top again on a hugely bearish, gigantic bearish engulfing ER sell signal. The next day we crashed, and we are now breaking and broken the bull trend line for the last few months since March. And it's a pretty good line, but now it's broken. But we went down so fast and so quick, I had to point out that you were overbought the next day. At the low of the day, you were already oversold. That does not happen very often. So my point was on Tuesday, probably too much too quick, and we could fiddle around a little bit before we start dropping the new lows, and I guess we could say that has happened. So the closes are a tiny bit lower on Wednesday, yesterday, and today we are at the moment a little bit lower. So there could be a bounce in the cards because of the oversold condition. And I certainly do not expect it to go very far to the upside. In fact, I'll tell you 3,462 looks very interesting for a rally high. But soon, next week, new low ground. Next, cotton. We had a bearish engulfing that worked okay for about a week, and today we're right back into that resistance area, and we're right back into overbought conditions, and we're right back into extremely likely price ranges in which we should turn right back down again. Why not? You know, it always looks this way when you're at the high tick, and it doesn't not look bearish. It looks like it could keep going. But this is where it could easily turn back down. So the trick is, how much lower, how long do you wait before you decide that that's exactly what's happening? Next chart. And I think that's exactly what's happening. That was cotton the rag. We got sugar. I'm still long-term bearish on sugar. Looking for 20 or a little bit lower maybe. Today we're rallying for a couple, 3 days slightly, not much commentary besides that. Looking for lower levels. Next, coffee starting to slip down, but in a very broad, longer term sense, we're in an area of support. Now, I do expect the lows in July to be tested. Today's low is almost there already. If they're broken, we get below 154 on a closing basis, they could probably dribble off to 147, 148 area. And I think that's apparently what's going to happen. We're not very close to oversold, so I'm looking for a little bit more of a break. And we're back to the E-mini. This is before the weekend, so I'll check the 1-minute charts here on the indexes real quick. And we see that it's trying to hold a support, which is 444 and a fraction. Remember, my gap is closed at 442.97. And we've already had a low of 443.30-ish, 35, I believe. So one more jab down today could do the trick. You guys have a great weekend. Thank you.